Over the past few years, the short-form video app TikTok has taken the world by storm. Just 5 years after their launch in 2016, TikTok achieved the milestone of 1 billion monthly active users, making it the second most popular social media platform outside of China, behind only Meta. Every day, people around the world spend more than 1 billion hours mindlessly scrolling through their TikTok feeds. TikTok has grown so big that even Zuckerberg is now worried about it threatening his monopoly position. From the outside, TikTok looks unstoppable, gobbling up billions of hours of people's time. But before the social media app can take over the world, they still have one big problem to solve. They're losing money, and a lot of it. TikTok is burning billions of dollars per year, and the more they've grown, the worse it's gotten. In this video, we'll look at why TikTok is having such a hard time translating its enormous scale into a profitable business. Trying to create a profitable social media company is hard, even for the world's biggest companies. Luckily, there's a much easier way to make money, investing in US Treasury bonds. Thanks to the Fed's rate hikes, Treasury bonds now offer yields as high as 5.5%, which is backed by the full faith and credit of the US government. And thanks to today's video sponsor Public, buying Treasury bonds has never been easier. In the past, you'd either have to go to a physical bank branch or navigate a government website that looks like it was designed in 1996. But with Public's recently launched Treasury accounts, you can access 5.5% Treasury bonds directly on your phone, with the flexibility of a bank account. And unlike a bank account, the bonds' yields are fixed until maturity, so you know exactly how much you'll make. When they mature, Public will reinvest them for you, so you don't have to do anything to continue growing your yield. You can now manage treasuries alongside stocks, ETFs, crypto, fine art, and collectibles, all on Public. So go to public.com/WSM to start getting a 5.5% yield on your cash, backed by the US government, link in the description below. TikTok is owned by a massive Chinese tech company called ByteDance. They operate two apps, Douyin in China and TikTok outside of China. The two apps are basically the exact same thing. The only difference is Douyin enforces censorship and other restrictions to comply with Chinese laws. ByteDance is not publicly traded, so they don't disclose their financial statements. However, we can still get some information. All of TikTok's European operations are owned by a subsidiary called TikTok UK. The UK requires large companies to publish audited financial statements, even if they are not listed on any stock exchange. They first started monetization in 2019. By 2021, their revenue had exploded to the equivalent of $1 billion US. Remember, while this subsidiary is called TikTok UK, it represents the company's operations across all of Europe. While their revenue growth has been impressive, their profitability metrics are appalling. Their cost of goods sold was also about $1 billion. This means their revenue isn't enough to even cover the direct costs of operating the platform. They also had substantial sales and marketing and administrative expenses, yielding an operating loss of $900 million. This result is surprising because TikTok is very popular in Europe. According to the market data firm Business of Apps, TikTok had 138 million annual users in the continent for the year of 2021. Like any social media company, TikTok's primary source of revenue is advertising. As you scroll through your feed, every few minutes you'll see an ad. The ad takes the same format as regular videos. With $1 billion of revenue and 138 million users, TikTok made about $7 per user in Europe in 2021. For comparison, Meta, the owner of Facebook and Instagram, made $65 per user in Europe, almost 10 times what TikTok made. This is not for a lack of engagement. The average TikTok user spends 1.5 hours per day scrolling on the app. So why are they having so much trouble turning this into revenue? At the end of the day, TikTok's customers are not their users. It's the brands that advertise on the platform. For companies to spend money on advertising, they need to be confident that they'll receive a return on their investment. That's where TikTok has struggled. In October of 2022, the digital advertising firm Creatopi conducted an experiment of advertising efficiency for TikTok, YouTube Shorts, Pinterest, and Instagram Reels. They spent a few $100s on each platform to run the same short-form video ad, and compared how well each one converted to sales. They spent about $700 on each platform. In terms of number of ad impressions, TikTok was the cheapest. For $737, they got 155,000 people to see the ad. This translates to $4.74 per 1,000 impressions. That makes TikTok the cheapest of the four platforms. But just getting someone to view your ad isn't what matters. What really matters is how many of those impressions result in a sale. Creatopi also tracked how many people clicked into the ad and went to the product's landing page. YouTube Shorts had the best results by far, with 366 landing page visits. TikTok was much worse, with only 165 visits. Instagram Reels was even worse, with 44 visits, and Pinterest was a complete failure, yielding only 5 visits. There are a few theories as to why YouTube performs so much better. YouTube tends to have more educational and serious content, while TikTok and Instagram Reels are mindless dancing videos and comedy skits. TikTok and Reels users are so engrossed in the videos that they don't want to disrupt their viewing session to buy a product. The platforms are too addictive for their own good. TikTok does have better performance than Reels, but that's like being the tallest kid in kindergarten. Meta unveiled Instagram Reels in 2020 as a competitor to TikTok. While it has been very popular in terms of viewership, they've had a much harder time with monetization. Recently, Meta has been de-emphasizing Reels as they want people to go back to the regular Instagram feed, which is much more profitable. When you're scrolling through the regular Instagram or Facebook feed, you're not nearly as engrossed, so you're much more likely to leave the app to buy a product that you saw on an ad. This is much more attractive to advertisers. There's an argument to be made that TikTok's actual marketing effectiveness is underappreciated. While you're watching TikTok, you're so engrossed in your viewing session that you don't want to leave the app to buy the product immediately. But the next day, if you're doing online shopping anyway, you might remember the product you saw on TikTok and buy it. In this case, the advertiser has no way of knowing that the ultimate intention came from TikTok. Thus, it's very hard to know how much sales the TikTok campaign actually generated. Another problem is that many brands advertise on TikTok organically. They create humorous TikTok videos and jump onto the latest trends. The videos can go viral and get hundreds of thousands or even millions of views without any paid marketing. If you're already getting millions of views organically, why pay for more views? The reality is that short-form video content just isn't conducive to performance advertising. TikTok knows this, so they're investing billions to create alternative monetization strategies. While TikTok is losing money, ByteDance itself is extremely profitable. According to unconfirmed media reports, the company made over $20 billion of EBITDA in 2022. This is because the Chinese version of the app, Douyin, is profitable. They've been using the profits from Douyin to fund the losses at TikTok. Douyin also generates revenue from advertising, but most of its revenue comes from live streaming. Similar to Twitch, influencers can live stream on Douyin and their fans can send them virtual tips. Douyin takes a 50% cut of the tips. Also, influencers can sell products directly to their followers. Douyin takes a 5% cut of the gross value of all products sold through the platform. This has become extremely popular in China, with people from all walks of life selling things on the platform. Some farmers even turn to the app to sell their produce. This type of advertising can be extremely effective. The influencer often sells products he or she makes themselves, making it feel more authentic. And because it all happens within the app, you don't have to disrupt your viewing session to place an order. Douyin is profitable because they successfully diversified their revenue streams beyond advertising. But can TikTok do the same? TikTok has live streaming and e-commerce features just like Douyin. The problem is, live streaming is not nearly as popular in the West. In 2022, it is estimated that live streaming and e-commerce sales reached almost $500 billion in gross merchandise value in China. In the US, it only generated $11 billion of GMV, about 2% of China. That's not to say that live streaming isn't a thing in the US and Europe. It absolutely is. But Western viewers are far less likely to buy a product from an influencer than their Chinese counterparts. Why has live shopping become so successful in China, but failed to catch on in the West? Honestly, I have no idea. Live shopping never seems to work in the US or Europe, despite TikTok, Facebook, and Amazon all having tried it in various forms. So TikTok has now set its sights on Southeast Asia, which is culturally more similar to China, so they can hopefully have more success. In 2022, they had $4.4 billion of gross merchandise value in the region, representing about 4% share of the total e-commerce market. This also represented a more than 300% growth rate from the previous year. While the growth has been impressive, they are almost certainly losing money as they have been subsidizing shipping costs. TikTok has no in-house logistics capability. They don't own any warehouses or employ any delivery drivers. They outsource the entire process to third-party logistics companies, which is very expensive. The other two main competitors in the region, Shopee and Alibaba-owned Lazada, have invested billions of dollars into their own logistics capabilities. Because they don't have to hire third-party contractors, it's a lot cheaper for them to get a product to the consumer's door. TikTok says that they will invest billions of dollars into the region over the coming years. It remains to be seen whether TikTok will ever recreate the success its parent company achieved in China. Alright guys, that wraps it up for this video. What do you think about TikTok? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.